Hey everyone, and welcome to the Landlord Studio podcast. This show is all about giving you the best real estate advice from industry leaders across the US so you can learn to grow your real estate business and build long-term wealth. Let's cue the intro. Now, before we jump into today's episode, make sure you smash that subscribe button so you can get notified of every episode we release. And in today's episode, we are interviewing Mr. Anthony Scandariato. Is that how I pronounce it?
That was perfect. Great job,
Perfect.
Logan.
Not a problem. Anthony Scandariato graduated from Cornell University with a bachelor's degree in applied economics and management, was a co-founder in Ridgeview Partners. He specialized in the retail space with a vertical model that provided flexibility to serve multiple customer segments with similar product lines through retail, wholesale, and production contracting channels. Might have to learn bit more about what that means, but how are you going today, Anthony?
Sure. Good. I'm doing good. Thank you for having me on your show.
Not a problem at all. So I always like to start the podcast with a bit of an icebreaker question. So what's your favorite quote and why?
Sure. I think one of my favorite quotes is very simple. Start small and dream big. It's a
Mm,
Robert
I like
Kiyosaki
that.
quote.
Yeah.
Yeah, it's very small, very simple. And I know a lot of people, especially in the real estate industry, they don't really know where to start, or they want to start with $100 million property, and they want
Mm,
to do things that they've never done before, which is awesome. But I do think baby steps can kind of get you there as well,
yeah, totally.
instead of getting into analysis paralysis, is what we like to call it in the real estate industry. Thinking
Yeah.
about it, but not really acting on it.
Yeah, totally. It feeds really well into the last question of this podcast. But um, how and why did you start Red Knight Properties? Very interested in kind of your business model. Tell us a little bit about it and the history of it.
Sure. So great question, Logan. So I started Red Knight Properties because with my partner, we wanted to create a path towards financial freedom to help people leave their 9 to 5s through passive real estate investing, which is an ultimate goal of mine in the future in terms of passive investing. Right now, I've been on the active side, so two different types of investing that we participate in. But Red Knight Properties, as you mentioned, Logan, is a multifamily primarily real estate operating company. We buy mixed use as well. We have about 200 and it'll be a 270 units in our
Oh, cool.
portfolio within the tri-state area. We're based in New Jersey, right outside of the New York City metro area, and we own in three states right now. So we specialize in value add, kind of Class B workforce housing,
Mm,
garden style apartment communities where we can create a lot of value very quickly through capitalizing on deferred maintenance, um, below market rents, inflated operating expenses, and are able to help ourselves and our investors create a nice nest for them and to help diversify people out of the stock market.
yeah, totally. That's cool. Feeds really well into my next question, which is why is investing in multi-family syndication like such a attractive method for you specifically?
Sure, it's an attractive method because there's scale. When
Yeah.
you buy a 1 to 4 family by yourself, that's great. But at the same time, you're really limited to the sales comparison that are around you. You can force appreciation like you do on a commercial building to a 1 to 4 family, but it's not going to be the same at all in terms of really, really generating um, the forced appreciation that you need to drive the value of the building through the income approach. You're really subject to, like you said, what your neighbor sold his property for and what the guy down the street sold his property for at the end of the day.
Yeah.
Um, so, like I said, what really attracted me to syndication is the scale ability and also the ability to force appreciation.
Yeah, that's really interesting. A lot of our customers tend to go for multi-unit properties, specifically the multifamily. And they've definitely found that a much more attractive than kind of single-family homes. You can almost just kind of get more out of it for what it is, and much more scalable, like you're saying. How do you typically kind of manage your properties? I know Red Knight is kind of a real estate management firm or investment firm. Do you typically hire in-house property management companies, or do you self-manage, or do you contract property management firms in the particular areas of your investments, or how does that kind of work?
Sure. So great question, Logan. So we, for the time being, we self-manage all our properties, meaning in-house. So, and the reason why we do that, to answer your question, is because most of the properties that we've acquired are pretty local to us, within an hour of
Mm,
myself and my partner
yep.
driving radius. So it just makes sense. And especially when you're um, acquiring value add properties, it's really important to be hands on. You could still pass off the management to a third party, operator, as long as you're on the same page and you really trust them and you understand. But if you had the ability to do it in house, then I would recommend to do it, because ultimately it helps drive operational value at the end of the day.
And it probably is a lot cheaper as well. As soon as you start kind of contracting third-party property management software, property management solutions, the price just kind of goes up, and then your total profit, or the amount of revenue that you're kind of generating, just becomes less and less, as they're kind of charging like 7%, right, on your on your rent. Um, yeah, that's really interesting. So you self-managing, and this is a question for one of our customers. We hear this a lot. How important is it to kind of, so you've kind of got your like organization level, which is your company that's managing these properties. Then you've got your properties, and then you've got the units inside those properties. For those that are tracking expenses across all three of those particular areas, how important is that from a tax perspective, and then filing taxes? And how do you typically manage all your accounting and all your expenses, etc.?
Sure. So there's different forms of property management. You can have property management in-house minus accounting.
Yeah,
Accounting definitely is one of the key components of property management. Right now, we do our property management accounting in-house as well. We are looking to outsource that because it is very time consuming. Um, it's worth There's a lot of different real estate, almost like startup companies, that are helping drive down the cost for day-to-day bookkeeping,
yeah,
because that really takes time to get it right, at least. Um, so we do recommend to to outsource that if it's worth it. Um,
yeah,
what we don't outsource on the management side is, like I said, the leasing
yeah,
and obviously the collections and the calls. But yeah, in terms of from a tax perspective, it's it really depends. You have, like you said, you have hypothetically three different entities. We own everything we have a management company that's kind of separate. So if we're managing a property, our management company and any revenue that's generated from management income flows through there, and then we have separate entities for each property.
mm,
So sometimes it really depends. It's a loaded question. So um, it depends on what the whole picture looks like. You can't really, in my opinion, look at it all separate, especially if you're on the operator side. It's because it's all gonna flow through together.
yeah,
Um, so like we'll do a cost segregation for our properties, and that may help offset the management income taxes that we're going to have to pay. There's a lot of different ways to look at it, but every time we're evaluating a property or we're evaluating growing our company, we do try to figure out how to minimize taxes as much as we can, and
Yeah.
um, how to take advantage of the tax laws that are very favorable now for um, basically full-time real estate investors.
Yeah, for sure. Kind of on that, have you had much of an impact from the whole pandemic situation, like both from your business perspective, but maybe also from the tenant perspective as well? How's this whole situation kind of affected you as a whole?
Yeah, sure. So from the business perspective, in terms of the new acquisitions, yeah, we had a couple die, but we had a few that got resurrected, and then we had a few new ones that just came up. So just like the rest of the country and really the rest of the world, we did pause with everybody.
Mm,
Um, and from a tenant's perspective, we were very fortunate to have 95% plus collections in March, April, May, hopefully June. We're recording this in the middle of June now. June's looking pretty good as well. So we've been pretty fortunate there. We've been on top of our tenants a little more than usual, but from the start, we're pretty on top and we're pretty enforceable of late fees and paying rent on time. So I think there was a mutual respect there in the first place. And our properties are, like I said, they're kind of B minus, C plus. So, when we're talking about the rent levels in New Jersey, $1,000 to 1,500 is not a lot for an apartment. So,
mm.
um, compared to some areas very close to New York City, we usually invest an hour, at least an hour outside of New York City, and there's still a lot of demand, and still a lot of people. Um, so we fortunately didn't really get hit on the collection side at all, which we've been very very fortunate because there has been horror stories. So
Yeah, I've heard some really bad stories of people kind of. So, for example, I spoke to this guy a couple of weeks ago actually, and he all of his rent basically dried up. All of his customers took advantage of the fact that you couldn't evict tenants in some states during this time, to the point where he basically had to hand the keys back to the bank, and that's kind of worst case. That's worst case scenario. So it's definitely hit people kind of on all spectrums. And I guess from that, like, what advice would you give to maybe real estate investors going through hard times like this? They've got properties, they're going through hard times. What kind of advice would you give to those investors?
sure. So I think that we were very fortunate to have reserves on hand
Mm,
just in case, and we still have reserves. Um, and if you're syndicating deals and you have other investors involved, and there was a pandemic, and you wanted to make a distribution, they should understand, hey, it's not a good time to make a distribution right now, or if you're going to make one, make a little one, not as big as you intended to, just to keep it flowing. Make sure you have plenty of reserves in the bank account prior to making distributions on for yourself personally and for any syndicated deals.
yeah,
And to take advantage of, if you have a Fannie Mae, Freddie Mac agency backed loan on one of your multifamily properties. Take advantage of some of the forbearance that they offer. Um, you know, I wouldn't recommend it, to be honest. What I really would recommend is to work with your tenants.
yeah,
So the way
totally.
you do that, talk to them. Don't open the floodgates and say, "Hey, anybody having problems? Let me know." Let them come to you.
Mm,
Um, and obviously, if they're not paying your rent, you have to go to them. But for the most part, let them come to you. And if they're having problems, they will. And if they're decent tenants, they will. Um, you'd be surprised how willing tenants are to they want to pay if you have good tenants.
yeah,
Your horror story, we try to avoid. I've seen a lot of that in like the class C minus, D plus, like kind of like that type of product having a lot of issues because they're just taking advantage of all of the political policies that were put in place because of this. But for the most part, your average American, is going to want to pay, and they're going to have to pay eventually. So,
yeah. Cool. And finally, what advice would you give to a new real estate investor wanting to get into investing in property?
Yeah, kind of going back to my quote in the beginning, it's okay to start small. I started out with a two-family property that basically bought myself, and um, was able to turn it around pretty quickly and start developing a track record. So if you can do that, you can show you're producing returns. You can have case studies that will set you on the right path, whether you want to get into syndications or you just want to keep buying deals on your own or with a couple of close friends or partners, family, whatever it is. People take you more seriously when you're actually producing results. So,
Yeah, perfect. Awesome. Well, really appreciate you coming on today's podcast, Anthony. Where can our audience find a bit more about Red Knight Properties?
sure. So we have a special report. It's called How to Leave Your 9 to 5 Through Financial Independence Through Real Estate. It's a free ebook on our website, redknightproperties.com. It'll pop right up when you come on. You just got to type in your email and you'll get it emailed to you. And then, you could definitely reach out to me on there. You can schedule a call, a Calendly call on there with me. And then also we have LinkedIn, Facebook, Twitter, Instagram, you name it. So
Awesome. Well, that's great. And thank you very much for everyone listening today. Again, hit that subscribe button below so you can get notified of every episode that we release. Thank you very much, Anthony, and I hope you have a great rest of your week. Cheers.